nearly 10% of the GDP. The deficit declined in fiscal years, and in 2014 it was $485 billion, which is a reduction of $928 billion. But only the most superficial analysis would lead anyone to believe that this is a credible policy accomplishment by the administration, because as we know, the deficit is the difference between spending or outlays, as we like to call it, and revenue. When you look closely at what accounts for recent deficit reduction, you'll find that increased revenue accounts for about 99% of that $928 billion deficit reduction, whereas decreased outlays only about 1% of that. And if you look more closely at the decreased outlays, all of it is attributable to the discretionary side of the government's ledger. And so in fiscal year 2009 through 2014, discretionary spending decreased, actually went down by $58.8 billion, but mandatory spending increased by $47.3 billion. So that means that all of the spending restraint for the past 5 years is the result of the hard work of the Appropriations Committee under the leadership of our able full committee chairman, Hal Rogers. Nonetheless, even as the deficit has declined, total public debt outstanding has grown to a record high of more than $18 trillion. The demographic changes underway in this country mean that benefits like Social Security, Medicare, Medicaid enjoyed today, they're going to be bills that are paid tomorrow by our children and our grandchildren. And regrettably, the President's budget does not address the unavoidable question of how to distribute the economic cost of an aging population across generations. So because of this, Mr. Secretary, I urge you to work with the Budget Committee and the authorizing committees to help lift the yoke off the back of the younger generations of hard-working Americans. Now, the Treasury Department's budget request for this year is strikingly similar to last year, with the exception of the IRS. Instead of the $1 billion increase, the Department is now requesting $2 billion increase for the IRS. And you might remember I described last year's request as troublesome, but now that it's a $2 billion request, I would say it's even more troubling, because we're going to have a separate hearing on the IRS, and Commissioner Koskinen will come before the committee. And I think we've made it clear that the IRS has betrayed the trust of the American people. I think they would agree with that. And we talked about their need to restore that trust, earn back that trust. And so we want to see that happen. But in spite of that, the request from the IRS actually this time seeks to pay certain IRS employees salaries and bonuses that are bigger than what is allowable under the civil service system. And the request also eliminates some of the requirements that we put in our bill, such as prevent the IRS from targeting. That's gone. Review the appropriateness of IRS videos. That's gone. Comply with the Federal Records Act. That's gone. Guard against excessive conferences spending. That's gone. Uphold the confidentiality of tax returns. That's not there anymore. And to me, these are common sense, good government reforms that help heal some of the IRS self-inflicted wounds. More reforms, however, may be necessary if the incorrect information sent to about 800,000 low to moderate income households foreshadows yet even more difficulties with the administration of the Affordable Care Act. Now, I'm also troubled by the Department's desire to cut funding for the Office of Terrorism and Financial Intelligence. It seems particularly ill-conceived when we're trying to deal with ISIL. We want to cut off the funding for that terrorist group. We think that ought to be a priority. When we're trying to monitor the Iranian economy and financial transactions, that may be necessary with or without the final nuclear deal. And when we might need additional economic pressure on Russia if the Ukraine ceasefire doesn't hold up. So the administration's decision to normalize relations with Cuba, that's causing some concern, especially with regard to the increased people-to-people context and the trafficking of confiscated properties. So that's something we're going to follow closely and carefully. But still, I want to hear, Secretary Lew, what you think are the most important aspects of the President's budget, the Department's budget, because I'm hopeful we can find some common ground to work together. In addition, I'm interested in hearing a little bit about the Financial Stability Oversight Council, the so-called FSOC. They have adopted some guidance that attempts to improve the transparency with regard to entities under consideration for the so-called SIFI designation, the systemically important financial institutions. Now, I think that the transparency step is a right one in the right direction, but the FSOC actions, as I understand it, didn't really address some of the concerns about how it will mitigate this systemic risk. I question why the FSOC would create a process to allow companies or primary regulators. Why wouldn't you let them address the identified risks before designation? It seems to me that would save a lot of time and a lot of resources that the council as well as everybody could enjoy, and that would maybe ensure more economic stability. And so before you move into your testimony, let me just say one thing about what's going on today in the Supreme Court. As we all know, they were having oral arguments about King versus Burwell, and that case has the potential to outlaw subsidies that are inherent in the Affordable Care Act for millions of Americans who enrolled in the health coverage through the federal exchanges. And if you recall, the Treasury Department was unprepared under an earlier decision. It was called Loving versus IRS, and that determined that the IRS didn't have any authority to regulate paid tax preparers. Now, this is something, King versus Burwell, is a lot more consequential, a lot more complicated than Loving versus IRS. And so I hope that the Treasury has a contingency plan in the event of a ruling in King versus Burwell that outlaws subsidies. So love to hear if you have any thoughts about how you're going to prevent these millions of Americans from entering a prolonged period of uncertainty surrounding their health care and tax liability if King versus Burwell is decided for the plaintiffs. These are ordinary and customary questions that any prudent organization would undertake to manage their legal risk, no different than the contingency plans that Treasury, FSOC, and other financial regulators are asking from the private sector for all sorts of possibilities. And last thing, Mr. Secretary, I just want to take a minute to highlight some landmark legislation that was signed into law late last year. It was called the Achieving a Better Life Experience Act, or the ABLE Act. What that did was create 529 savings accounts for people with disabilities. It actually levels the playing field for millions of Americans who are going to be allowed to use tax-free savings accounts for certain expenses, just like they can save money for retirement or save money to go to college. And as you may know, the states are responsible for administering the program, but the department needs to issue regulations, and I'm hopeful that they will meet that statutory requirement, and hopefully the states can move as quickly as possible, because there are millions of Americans that are going to have a door open to a brighter future. So again, let me thank you for taking the time to be here today. I look forward to hearing your testimony. And now let me turn to the ranking member, Mr. Serrano, for an opening statement.
Thank you, Mr. Chairman. I'd like to join you in once again welcoming Secretary Lew before the subcommittee to discuss the department's budget for fiscal year 2016. The Treasury Department is at the center of our economic recovery plan, plays an important role in the implementation of some of our most important public policy initiatives like the Affordable Care Act and Dodd-Frank, manages our nation's finances, and works to enforce our tax laws fairly. I have not mentioned everything, but it is plain to see that this is a diverse set of responsibilities. Your budget request attempts to improve funding levels for many parts of your work, but let me highlight just a few. First and foremost, your budget attempts to restore the devastating budget cuts that hit the IRS in fiscal year 2015. The IRS estimates that the $346 million in cuts offered last year will result in a $2 billion less in revenue collected and in fewer services to honest taxpayers trying to get their questions answered by the IRS. In other words, we are increasing the tax gap and making things more confusing for taxpayers. Regardless of your feelings regarding the handling of the IRS's problems, this is not a recipe for success. We cannot keep pretending that less investment in the IRS is somehow going to increase compliance and lower the tax gap. That is why I applaud your efforts to restore IRS funding to more sustainable and effective levels. Additionally, you request a modest increase for the Community Development Financial Institutions Fund. The CDFI fund has helped invest hundreds of millions of federal dollars in my congressional district since its creation 20 years ago, and has been an important driver of economic development in my district, in the Bronx, and in other underserved communities. Although I am concerned that the department has once again recommended the elimination of the BEA program, I am heartened that we all agree about the importance of the work that the CDFI fund does every day. Lastly, I would be remiss if I did not mention the department's important role in implementing the President's groundbreaking change to our ineffective Cuba policies. I look forward to working with you and with the Office of Foreign Assets Control to make sure that there are no problems with the implementation of these efforts. Secretary Lew, I know that this change in Cuba policy is historic. Some of us thought it would never happen, and it entails a lot of changes and a lot of great possibilities for both our countries, and we will be working with you to make sure this goes as smoothly as possible. And I thank you for your being here today.
Thank you. And now I'd like to turn to the ranking member of the full committee, my good friend Nita Loy, for her opening statement.
Well, thank you very much, Chairman Crenshaw and Ranking Member Serrano, for holding this hearing, and to my friend Secretary Lew, thank you for joining us today. Mr. Secretary, your fiscal 2016 budget requests $14.3 billion for the Department of Treasury's operating bureaus and $2.9 billion for international programs, which is covered by the Subcommittee on State and Foreign Operations. As you have noted, the President's budget would achieve $1.8 trillion of deficit reduction over 10 years, primarily from reforms to our health, tax, and immigration systems. If it were adopted, deficits would continue to decline to about 2.5% of GDP over the 10-year budget window, which is down 75% from a peak of 9.8%. And we added more jobs in 2014 than in any year since the late 1990s. And yet, we can and must do more to continue to provide access to capital and get people back to work. In other hearings, some of my friends on the other side of the aisle have stated their opposition to many of the revenue portions of the budget request. While I believe Congress should closely scrutinize and shape the final product, I would point out the constraints that our committee has operated under. Even excluding sequestration, Congress has passed and President Obama has signed into law more than $2.5 trillion in deficit reduction, $1.5 trillion of which has come from discretionary spending cuts. In fact, discretionary investments are on a path to be at their lowest level as a share of GDP since the Eisenhower administration. I ask my friends on the other side of the aisle, after this committee has cut so much, are you really unwilling to close tax loopholes in order to invest more in transportation infrastructure, education, job training, biomedical research, and other R&D efforts, and the military as well? Thank you very much.
Thank you. Mr. Secretary, they've called a vote. There's 11 minutes left, and there's plenty of time if you'd like to take a few minutes to make an opening statement. We'd be happy to hear that, and then we might take a brief recess and come back. But please, the floor is yours, and feel free as long as you don't go more than 5 minutes.
Well, thank you, Mr. Chairman, and I would ask that you include my complete testimony in the record. And in the interest of time, I would be happy to dispense with my opening remarks and take questions right away, since I know with the votes coming, there may be challenging for some members to come back.
If that's okay with you, why don't let me ask one question, and then I think with 5 minutes to go, since we have a series, we'll all probably have to get up and leave, but I think it'll take less than 30 minutes. Let me just ask you about this Financial Stability Oversight Council that we talk a lot about, the FSOC. Remember last year I asked you some questions because you're the chairman of this FSOC, and it seems to me just over this last year that there more confusion has been added. A lot of people are trying to do the right thing, but they don't know exactly where they stand. The question of transparency was dealt with, but it seems to me it's having the opposite effect. It ought to bring stability to the financial markets, but it seems to be working the other way. And I've told you, and I've told SEC Chair White, that I think the individual regulatory agencies are actually better equipped than FSOC to handle some of these things. But for instance, if the primary focus is to identify and ensure systemic risk are adequately and appropriately addressed, wouldn't that be better than just designating the SIFIs, the so-called just designating people as a SIFI? And do you give them the ability to address some of those systemic concerns before they get designated as a SIFI? And if not, why don't you do that? And finally, it seems like, tell me why it's better to have this new council as opposed to somebody that was set up like the SEC to address those kind of risks. Just touch on that about how the FSOC is actually working out.
Mr. Chairman, let me start by saying that I think if you look at our financial system today and compare it to the time before the financial crisis, it is a lot safer than it was, and there is a lot more protection for our economy and for the American people than there was before. So I think that the steps that have been taken have done an awful lot to reduce the level of risk. With regard to why FSOC and not regulators, before the financial crisis, there was no regulatory agency that had responsibility to look across the economy and ask the question, is there systemic risk that needs to be addressed? Each had its own siloed set of responsibilities. No one had responsibility for the cross-cutting question of systemic stability to be the driving question. FSOC was created to bring the regulators together and have a place where those questions could be asked across the entire financial system. The authority to designate a financial institution is really based in the statute on finding that there is a level of systemic risk. It doesn't say you can do things to prevent it. It says if you find that there is systemic risk, the act that FSOC takes is designation. And then there's a regulatory procedure that follows. In many cases, what FSOC looks at outside of the designation process are issues that go back to the regulators with primary jurisdiction. So, for example, on money market funds, FSOC has looked at that issue, but it went back to the SEC for rulemaking action. In the case of designations, that is one authority that FSOC, as a body of cross-government, across regulators, takes when the finding of systemic risk is made.
Just on that point, do you think that the SIFI designation is that appropriate for non-bank entities?
You know, I think that the question really has to go back to, does the entity present a level of risk that warrants the designation? And that gets to a question of the structure of the financial activities, the interconnectedness of the entity with other financial entities and individuals, and what the flow of risk would be if there were to be a failure of the entity. Obviously, since we have designated a variety of different kinds of actors, it's more than just traditional financial institutions. We have market utilities that have been designated, and we have several insurance companies that have been designated. I don't think that we view it as kind of a general directive to look at corporations, businesses, activities that don't have to do with the financial system. So there would have to be that connection to the financial system, but the kind of entity obviously has varied.
But for instance, I mean, if you get designated a SIFI, that can be costly. And if you designate, for example, an asset manager or a mutual fund, then they'll have costs involved, and they'll pass those on to their investors. And a lot of those are people that just saving for college or saving for retirement. And under Dodd-Frank, these non-bank SIVIs, they can be assessed to help pay for the resolution of the failing financial institutions, kind of banks. That's what we think of. But so you got these provisions, but when you designate an entity such as a mutual fund as a SIFI, then that means these fund investors, they might be on the hook for bailing out the banks who, I guess, were the bad actors in that case. So I guess, is that something you all have thought about when you designate a non-bank as a SIFI? These are, some might be average Americans who are relying on their investments, and they might end up on the hook to pay for some bad actions of a...
The purpose of FSOC, the purpose of financial reform, is to protect individuals from the kinds of instability that come when you have a financial crisis like 2008. In 2008, there were a lot of people who saved for college and their retirement who saw their savings just evaporate because of the financial crisis. So the goal is to see where there is systemic risk and address it. I don't want to say who is and isn't going to present that kind of risk, because one of the things I think FSOC has done very well is it's looked at every matter as a case-by-case review with a very diligent process where there's been back and forth with the company, and we've now, as you noted, adopted some new rules to increase the level of engagement with companies earlier on in the process. And I think that those findings will determine where designations are appropriate. We shouldn't have a rule going in of what we will and we won't do. What I'm committed to is making sure that the FSOC is always fact and analytically driven, that it be driven by where are the risks of the future, not the risks of the past. And our job is to make sure that we can tell those savers that we're doing everything we can to make sure that the financial system is safe and sound.
Thank you. And I just hope you keep in, the kind of the cost benefit, just everybody you deal with. There's a couple of minutes left. I think it'd be good to recess now. There's one amendment, a motion to recommit, and final passage. Should be less than 30 minutes. And I know the members have a lot of questions, and I appreciate you working with us. So let's stand in recess and come back as fast as you can. We will reconvene the hearing now, and I would like to recognize Ranking Member Mr. Serrano for questions.
Secretary Lew, before we move to your FY 2016 request, I'd like to revisit momentarily 2014 and 2015 with you. Specifically, I would like to speak about the impact of the deep cuts in the IRS budget. When inflation is taken into account, the IRS is now down to 1998 levels. What are the short and long-term ramifications of continuing to reduce the ability of the IRS to accurately and efficiently collect tax revenues?
Congressman, the funding levels at IRS are very troublesome. It ranges from not being able to do the basic things like answering taxpayer calls, putting them on hold for so long that they drop, to not having the resources to put into properly enforcing our tax laws. And in a system like ours, which is based on voluntary compliance, it is a dangerous practice to underfund enforcement for a long period of time. It's very corrosive. It loses money. It loses billions of dollars to underfund the IRS. And I must say that I'm proud of the team at the IRS, the career staff at the IRS, do an extraordinary job under very difficult circumstances. The inconveniences to taxpayers are being mitigated because IRS has been effective at using web-based information systems to provide information and to be able to respond to questions to reduce the call volume. But we can't count on that forever. At some point, you need to get a human being on the other end of the phone. I think in the world of technology, we have old systems, which if we don't continue to improve them, will become more and more difficult to just operate normally, but they also become more and more vulnerable to the kinds of threats that we face in cyberspace nowadays. So I think the underfunding of the IRS is short-sighted and damaging to one of the important institutions of any democracy, which is the organization that is responsible for making sure we collect our taxes from people who legally owe them and do it in a way that provides customer service that American taxpayers deserve.
Yeah, well, let me just go on the record once again as saying that I agree with you, and I agree with people in the past who've said the same or similar things to what you just said. There are some cuts you don't like, but some cuts you don't like and they make no sense. These cuts make no sense because eventually we hurt ourselves. We're supposed to be collecting more money, not breaking it down so you can't collect. Let me move on to one of my favorite subjects, one that I'm very pleased with, the new regulations or the attempt at a new relationship with Cuba. Without telling me anything about secret negotiations that you can't tell me, although we members of Congress think we should know everything, how is that going, and what are the changes that you feel your department will play a role in if we continue this road of normalizing relations with Cuba?
Well, Congressman, the role that we play obviously is in the sanctions area, where for most of my lifetime we've had limitations in place, and they haven't worked. It was an ineffective tool to change Cuba. And the president took actions, and we took actions with our authority within the law to take steps to make it easier for there to be contact between American people and the Cuban people, to make it easier to get information into Cuba so that they're exposed to more media and more information from the United States, and to make it easier to do certain kinds of financial transactions, both because of bank correspondent relationships and because of payment terms. We can't eliminate all of the restrictions because we had to operate within the law, which we did. But the purpose ultimately is to change Cuba. The purpose ultimately is for Cuba for the Cuban people to see that there is a better alternative to what they've had. And since the old system did not work, we're very hopeful that the new system will be much more effective. I'm not involved in the conversations that are taking place between the State Department and their counterparts, in terms of the diplomatic relations, but I know those conversations have been continuing.
Mr. Chairman, let me just take a few seconds to just get a thought from the Secretary. And I know that this is kind of out of left field, but one of the things that have always stuck in my mind is that for 50-odd years, Cuban artists have not received royalties for the music we hear in this country, for instance. I'm sure it might happen with other countries, but that's not something that government is holding or would do accounting for. Do you think that that will be on the table as part of the discussion? Do you think, I mean, we're talking about a lot of money, and who would hold that money on paper? Would it be?
I'm not actually familiar
ASCAP?
with the issue of royalties for
Right.
performing artists and where they reside. I'm happy to look into it and get back to you.
I would appreciate that. I would imagine it's with ASCAP or one of these agencies, but we're talking about a lot of money for over 50 years that not a cent has been sent, because we couldn't send money over there.
I'm happy to look into it.
Thank you, sir. Thank you.
Mr. Graves?
Thank you, Mr. Chairman. Mr. Secretary, always good to see you, and always enjoy having you before us, and it's always a spirited debate and discussion and gymnastics in some cases, and a lot of important issues we're all talking about, and just sort of to, I guess, revisit one, Operation Choke Point, that I know that this committee and the Financial Services Committee in the House has been very diligent about getting to the bottom of, and its effect that it's had on legally operating businesses that have been unfairly targeted and in some cases have been shut down. Would you commit to this committee and to the House Financial Services Committee and to the full Committee on Appropriations, myself, the Chairman, and Ranking Member, that we'll get to the bottom of this and resolve this totally?
Congressman, I know that there are ongoing conversations to understand the issues here. The objective has been to protect people from harm, not to cause problems. I'm happy to follow up with you. It's not directly in my area to respond to that question, but I'm happy to follow up.
Thank you. We would appreciate your assistance in getting to the bottom of this, and I'd hope you'd agree with us that, you know, really the federal government has no role in picking winners and losers when it comes to legally operating businesses, but we would hope that the focus would be on those who are committing crimes against innocent Americans and other financial institutions, that the focus would be there as opposed to the legally operating. As well, later this year, I guess it's in July, all sizes of banks are going to be expected to be in compliance with the Volcker rule. And December last year, the financial services industry submitted five regulatory agencies a proposal that was aimed at safely reducing the compliance burden for them and covered funds for legacy securitizations. I'm sure you're familiar with that proposal, and as the chairman of FSOC, can you give us a little bit of an update on that, and do you think these regulators will respond to these agencies or to these individuals or these organizations in this industry who submitted this proposal?
Congressman, when the Volcker rule was designed, it was designed with an understanding that institutions of different size had different situations. So it doesn't apply equally to all financial institutions. It is designed to reduce risk in the system so that financial institutions don't take on the kind of risk in their trading positions and the proprietary positions that they take that helped contribute to the financial crisis in 2008. A number of issues have come up that have been addressed subsequent to the initial rules, where the regulators have taken a look at information as it's come in. I'm not aware of additional action that is being taken right now, but I'm happy, as I said, to check on what the status is going forward.
As chairman of FSOC, maybe you could encourage the regulators to at least respond.
Well, they have been responding on a regular basis. They don't always respond by taking the action that's requested, and those are obviously different questions. There are a lot of financial institutions that would like the Volcker rule to be either rolled back or withdrawn. We continue to believe that it is a provision of law and there are rules that make our financial system safer and that protect Americans from the kind of risk that we faced. I don't believe was designed in a way that puts an undue burden on smaller institutions. When an issue that was an anomaly came up, they quickly addressed it in the early days after the rules were made. So I know that they are listening and paying attention. But some of the things that financial institutions are asking to have taken a look at have risk attached to it that would be problematic. So we can take a look at the specific request. But obviously, we do not at Treasury have the authority to make any of these changes. There are 5 independent regulators that wrote the Volcker Rule. We helped shepherd them through the process, but they have the authority.
Okay, understand. And then just one more question, and this, again, working with the House Financial Services Full Committee. You were in a hearing last year, and afterwards, Mr. Henseling had written you a letter in July outlining how overwhelming evidence has shown that overregulation in the corporate bond market has had negative effects on the economy. And I believe in your testimony, you downplayed it a little bit and didn't see any adverse effects. Can you help us today to know, I mean, what would you be doing as chair, or have you done as chair, to re-examine those cumulative effects that many would report have occurred? And maybe since you've had a different viewpoint, have noticed something in the market.
Well, Congressman, we are constantly looking at what not just the incremental impact is, but the cumulative impact, because it's a fair question, what is a cumulative impact? I think the cumulative impact has been that it is more costly for a financial institution to take more risky positions. There are more costs associated with being in both size and activity in riskier areas. And I think that makes the financial system safer, because what it does is it internalizes a lot of the risk that had been borne essentially by the American people. I don't believe it's had an adverse effect on the economy. The economy is doing quite well right now. We'd love for it to be doing even better, but I don't think there's there's a lot of evidence that it's because of financial reform that we're seeing the economy do well. I'm not saying it's one way or the other being caused by financial reform. I would say that having confidence in the market is something that helps the economy. And to the extent that there is less uncertainty about where the rules are, that helps the economy. And to the extent that the burdens cumulatively are at the level that makes institutions safer, I think that makes both the economy and the American people safer. So I don't subscribe to the theory that they've caused a lessening of economic activity.
Well, thank you for that explanation, and I agree. It seems the economy is doing better. I wouldn't suggest it's because of additional regulation.
No, I wasn't arguing one way.
In spite of the additional regulation is how I might put it. But thank you, Mr. Chairman.
Thank you. Ms. Lowy.
Thank you very much. Again, we appreciate your service. I'd like to turn to Iran for a moment, because I have been very concerned by reports of various European commercial delegations traveling to Tehran in eager anticipation of sanctions relief and the prospect of doing business with Iran. And I must say, by way of background, Stuart Levy and now David Cohn have both been very professional in doing a very thorough job. The administration has pledged to continue to strictly enforce existing sanctions on Iran, other than those relaxed under the interim deal. Yet I understand that Iran's oil exports are being offered from UAE trading firms acting as middlemen. A couple of follow-up questions. If you can tell us the current status of overall Iranian oil exports. Are we talking to China and India, both of whom are reportedly increasing their inputs from Iran this year? If these trends continue, is the administration going to sanction those countries? Specifically, what are the exports to China, India, and Turkey? And will you make publicly available the department's country-by-country estimates on Iranian oil imports? So what's happening?
So look, let me start with the general. I think that if you look at the Joint Plan of Action agreement, it has worked extraordinarily well. It has stopped Iran from continuing to build its nuclear capacity, the first time in over a decade that anything has slowed down, much less turned back their progress. It had clearly denominated relief that was granted that was not enough to even come close to the additional burden that ongoing sanctions are putting on their economy. $40 billion a year of additional burden or the cost of sanctions going forward, and the Joint Plan of Action was in the single-digit billions of relief. So I think if you look at where we are right now with Iran, Iran's economy is in still very difficult shape. It didn't recover from the damage that we caused by putting tough sanctions in place. And frankly, I think the reason that they're at the negotiating table is they want that relief, but they're only going to get it if it's an agreement that is a good agreement that ensures that Iran won't have nuclear weapons. We have been vigilant in the enforcement of sanctions, both in terms of financial institutions and oil. I have had conversations with many countries where we've made it clear that we are going to continue to enforce sanctions as long as they're in effect. And I've had the acknowledgement of that, and countries do not want to get crosswise with us on that. So I can get back to you on the specific details of what the flows are. There's always some periodic ups and downs in those numbers. But I think the bottom line is they got no more than the relief that we agreed to. And that is not enough relief for the Iranian economy to turn around. And the only way for them to get the kind of relief that they really desire is if they concede on the key issues in a negotiation to make clear that they will not have nuclear weapons. I think that we've made equally clear that if those negotiations fail, we will be the first to call for additional sanctions, and that all options would remain on the table in terms of making sure that Iran does not have nuclear weapons. So I'm very proud of the work our team has done. I agree with you that the directors of OFAC and now Adam Zubin, the acting director, is doing of TFI, undersecretaries of TFI, have done an extraordinarily good job. Their teams have done an extraordinarily good job. They work very hard, and I think they deserve the support that we and you give them. But I don't think that there is a serious case that we have seen a backsliding on the commitment to maintain the sanctions regime. There is obviously the negotiation going on, which, if it reaches a conclusion, would have to involve some modification. But we've also been clear that there are multiple sanctions regimes against Iran because Iran has been a bad actor in multiple different areas. And the only sanctions that we've talked about relief from are the ones related to the nuclear issue, not the ones related to terrorism and other things.
Maybe I'll give you one general question. You've made clear that the president will not accept a budget that reverses our economic progress by locking in sequestration. What did you mean by this?
I think that the challenge is going to be for Congress to come back and do another version of what was done in the Murray-Ryan agreement. Sequestration was never meant to take effect. It was designed to be something that was so odious to both sides that would make it possible to come together in the kind of balanced policies that would be a reasonable way to reduce the deficit as opposed to draconian cuts in discretionary spending. I don't think it's good for domestic priorities. I don't think it's good for our national security priorities. I find it somewhat odd that something that was meant to be so objectionable that it would be a motivation to do something as an alternative is now seen by some as something that has to be protected. Its purpose was to be a catalyst for different action. And I think what the president is saying is Congress has to do that. Congress has to go back and work on that kind of balanced approach. It worked to provide some relief for 2014 and 2015, but it didn't cover 2016. So we're now back in the world of those very, very low and we think unacceptably low levels. And we would look forward to working with you and others on getting that done.
Well, I am delighted to have the offer to work with you, and I hope our chairman and all the other members of this committee will do the same. Thank you very much.
Thank you. Mr. Ridgel.
Thank you, Mr. Chairman. And Secretary Lew, thank you for being here. And this is really, I guess, principally one of my first hearings on this committee. It's an honor to serve on this committee. I read the mission statement of the Treasury, and that's certainly common ground. And let me pick up for just a moment on this, the issue of sequestration and its reversal, or at least, if not full, at least a substantive portion of it. Just coming from my service on House Armed Services for 4 years, I have a clear understanding in our Joint Chiefs of Staff and all of our uniformed officers, and indeed the President has said that this is going to hurt our military. So you basically flipped it back to say it's exclusively, you may not have used that term, but it was certainly implied that finding a way out of this is Congress's job, and I would submit that indeed we do have a lot of responsibility here, but I'd say an equal one falls to the administration. We don't need to go back and forth and rehash how we got here exactly, but I do recall, and I believe it's not been disputed, that sequestration, at least the mechanism itself, was offered by the administration. Of course, it became law as a result of some votes here in Congress, but I'm submitting to you that the administration itself has a responsibility to lead in this area as well, and I'd like to know what, if anything, is on the table from the administration to provide even partial lift to it.
Well, Congressman, the President's budget provides the administration's view as to where we would go to put together an alternate path, which would be restoring levels to pre-sequestration levels and to hit the targets for fiscal policy that we've set, which are consistent with the path.
Well, let's walk through that then. I think this comes down to a lot of it. A lot of it comes down to just an assessment of risk and risk tolerance. The budget deficits that the administration has built into its proposal to Congress are unacceptably high to me, and I'd like to know what your working, your own internal sense of risk is, and as it relates to a deficit as a percent of our gross domestic product, and also our aggregate level of debt as a percent of our economy.
So, Congressman, the President's budget presents a path of deficits coming below 3% of GDP and staying in a zone for the next 10 years, the immediate budget window, that hits primary balance. You still have a deficit, but the deficit is basically related to the service of old debt, not the buildup of new debt. That is generally internationally seen as something that is the goal for fiscal sustainability. And in terms of
Is that, or and I just want to be clear, is it the 3% as a percent of the
well,
GDP?
3% primary balance, the number depends on a number of calculations. It's about 3% or a little fraction of a point higher or lower.
That's widely,
in that area.
That's widely recognized as by leading economists.
We're in the IMF when it goes internationally with targets. Now, I'm not saying that the goal over time shouldn't be in good times to have the ability to bring down the number lower than that. So I presided as director of OMB for 3 years in the 1990s when we had a surplus and we were paying down the debt. So I fully understand that when you have a strong economy and things are working the way they should, that there's an opportunity to do better than that. But in terms of fiscal sustainability, the norm of primary balance is what economists look at as being a measure of sustainability. In terms of cumulative debt, we obviously are at a higher level than we were before we ran the very large deficits because of the spending and tax policies early in the 2000s and because of the financial crisis and what it took to get out of that. But we've slowed the growth, we've stopped the growth, and we've kept it in a range that's not as low as one would want it to be if we hadn't gone through the bad decade that we went through, but is also at a sustainable level. So I think the President's budget, you look at the growth in our economy, it reflects a confidence in our economy that's coming back. It reflects a sense of a sustainable economy. Very different from when we had 10% of GDP deficits.
I've got about a minute left, and I appreciate your answer, and I'm kind of wrestling with some of the things that you shared. Time doesn't permit me to go back and address all of them, but for the longest time, the President would say we need a balanced approach, and for a long while, I was actually trying to help out with that and advocated for Republicans to move just a little bit on revenue. But so far as I can tell, in the last 4 years that I've served, we've had about $1.8 trillion in tax increases, roughly $1 trillion in the Affordable Care Act, or as I think of it, the Unaffordable Care Act, and about another $800 billion at the fiscal cliff. Are you aware of any aggregate measure of any substance that meets the definition of balanced approach? That is, to me, a balanced approach would mean nothing less than a 1-to-1 ratio of revenue to expense reductions, and I don't think we've met that standard any of the 4 years that I've been in office. Do you? Are you aware of anything? I only have a few seconds left.
Congressman, the discretionary cuts are obviously very large, and they're roughly comparable to the tax increases that you've described. What's not there in a large form are the kinds of savings and mandatory programs.
I agree with you. We're in strong agreement there.
The president's budget has $400 billion of savings proposed as part of a balanced plan in mandatory programs. The challenge has been to put a balanced approach together in one package and to finish the job. And
Secretary Lew, I thank you for your testimony, and I'm going to look for some common ground here, and I mean that, and I thank the chairman, and I yield back.
thank you.
Thank you.
Thank you. Mr. Bishop.
Thank you very much, Mr. Chairman. Welcome, Secretary Lew. Mr. Secretary, to the surprise of many in my home state of Georgia, the state is the center of gravity for the entire payments industry across the globe. In 2013, there were over $4.4 trillion in credit card, prepaid card, and gift card transactions. Back in 2012, the Consumer Financial Protection Bureau released an advance notice of proposed new rulemaking primarily focused on general reloadable prepaid cards, GPRs. On November 15, 2014, CFPB released a far-reaching 870-page notice of proposed rulemaking seeking to regulate the prepaid card products. The prepaid card industry nor consumers had any indication or forewarning that CFPB's proposed rule would be so long and overwhelming. The CFPB's NPR significantly expanded its rulemaking beyond GPR cards by applying new regulations to other types of prepaid cards that are currently regulated, such as student cards, government benefit cards, and payroll cards. After the notice of proposed rule was released, the prepaid industry and members of Congress asked CFPB to extend the 90-day comment period for an additional 60 days, which request was denied. In addition to the first congressional request, the Georgia congressional delegation put forth its own request, and we're still waiting for a reply. As you may know, federal and state governments comprise the largest group that use prepaid products because prepaid cards are a cost-efficient payment option compared to paper checks. And according to Treasury, it costs $1.03 to issue a paper check and only 10.5 cents to issue an electronic payment. As a form of electronic payment, prepaid cards help governments at all levels disperse benefits, Direct Express, child support, WIC, SNAP, etc., in a very cost-efficient manner. Do you know, or can you tell us whether CFPB conducted a cost-benefit analysis detailing the potential cost of the proposal and the cost that it would have on federal and state governments who use prepaid cards to disperse benefits? And do you know what the cost would be to the federal government if we had to return to using paper checks to distribute and disperse federal benefits?
Congressman, I don't think anyone's proposing that there be a cessation of the use of prepaid cards. Obviously, the CFPB rule is not in our direct jurisdiction. I would defer to Director Cordray and the CFPB on the details. But I know the purpose of the rule was to protect consumers and to make sure that prepaid cards, which are a growing form of transactional, a transactional tool, are managed in a way that is consistent with protecting both individuals from charges and other costs that they might not see. I agree with you that prepaid cards are more efficient in many cases for governmental transactions, and was part of turning some of our federal benefit programs into smart cards in earlier years. So I very much understand the value
But
of
the
them.
cost of compliance with an 870-page rule would be significant to the parties, the states and local governments, and any other parties that utilize the prepaid cards.
I think the CFPB has been remarkably effective in its short life, designing rules that are well thought through and that are managed well in the marketplace that they're designed for. I don't think.
Do you know if they did a cost-benefit analysis?
I'd have to defer to the CFPB on that and be happy to put the question to them. I think that.
The answer is no, you don't know.
Well,
You don't know.
I'm not aware of what analyses they did. I do know that the purpose of the rulemaking was to protect consumers. It was not to create a bar to the use of prepaid cards on a broad basis. I'd be happy to refer the question to Director Cordray.
Right, I would appreciate that very much. And I wasn't suggesting that it was designed to be a bar to the use. But what I was suggesting was that the burdensome rules and rulemaking could discourage the use of it and could make it much more difficult. And of course, if states that have found it very efficient continue to use it, it may increase their cost in doing it from the 10.5 cents to whatever the regulatory compliance cost would be to comply with such rules. That was my concern. Excuse me. Georgia's number 2 for identity theft cases and prepare for fraud. 44% of the cases in 2014 from Georgia were ID theft-related cases, and IRS has not passed any guidance regarding prepare fraud cases. Victims face financial and economic hardship as a result of the preparer absconding with refunds and leaving the taxpayer with an IRS balance due, in addition to not ever receiving the refund that the IRS rightfully owes them. For example, there was a Georgia taxpayer in the process of purchasing a home when a preparer diverted her refund to the preparer. The taxpayer lost the home, she lost the down payment placed on the home, and she lost the car. The taxpayer stated the preparer is getting ready to open a new tax preparation business, giving plenty of opportunities to steal refunds from additional unsuspecting victims. As the IRS reduces tax preparation services, as your budget indicates, taxpayers are forced to seek preparation services for a fee, leaving them at risk of obtaining services from unscrupulous taxpayers. What recommendations do you have for a resolution for this problem? Is it solely an issue of increasing your budget of IRS, or are there additional reforms that would be needed?
Congressman, the President's budget requests $101 million in investments to help combat tax-related identity theft. It would include expanding the services and assistance available to taxpayers who've been victimized by identity theft. It's a very significant problem, and I think it's one that we owe the American people to put the resources into to deal with. We know that in general, in the area of the cyberspace, cybercrime, that there is an increasing level of activity out there, and we have to keep up and find the problems as they're developing and address them because the American people deserve that. But it does require funding the activities. So I wouldn't say it's just money. It's money that you put to the right purpose. But we have a plan which, if it's funded, we think would continue to make progress in this area. Yes, it is. Thanks, Congressman.
Thank you. Mr. Womack.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for your appearance today. Interesting testimony. You know, when I read your bio, I think, there's probably not a better person out there that could sit down in the Oval Office and have a conversation with as much know-how and experience as you have based on your time at OMB and as a chief of staff and as even the architect behind a program like AmeriCorps that I've had some experience with, to talk about, to be of counsel to the President of the United States so that when he sends a budget, and I'm the new appropriator on the Budget Committee, that when he sends a budget up, that it's something that we could all kind of rally behind and try to find some common ground on and that sort of thing. So here's my question for you. When you sit down in the Oval Office with the President and you talk about the next 10-year window, and particularly as it concerns deficit spending and the need for us to find meaningful and sustainable reforms in our social safety net program that we all know, everybody up here knows, is driving a lot of the deficit and contributing to our national debt. What's that conversation like? What advice do you give the President?
Well, Congressman, obviously, any conversations I have with the President in the Oval Office, under any of the roles that I've served in the administration, deserve the privacy of the Oval Office. But I think if you look at the actions that we have taken over the administration, I was part of it at OMB and part of it when I was as Chief of Staff to the President. It was try to find a balanced approach where we did all the different things that you needed to do to fix the fiscal challenges. That obviously didn't work. And we ended up doing things piecemeal. So we've gotten discretionary cuts and we've gotten some of the revenue measures. We haven't had the conversation where all the pieces came together and we had a comprehensive approach. There were moments when I thought we were close to getting that kind of an agreement. I thought at the time that it would have been the right thing. As we look at the depth of the sequestration cuts, I think it's clear that discretionary spending has borne more of the burden than it should. My view is that on the revenues, we haven't completed the job, and we haven't really gotten where we need to go on some of the mandatory programs. I do think that what we've seen in healthcare costs has been very meaningful in terms of the reduction in the rate of growth of healthcare spending. And whatever one's view of the Affordable Care Act, I obviously think it's a very important initiative. The effect in the years since the passage of the Affordable Care Act has to have the slowest rate of increased cost in healthcare in a very, very long time, which has enormous impact on budgetary projections, given the size of healthcare spending as a percentage of the budget. So I think if you look at our actions, I'll have to leave to your imagination the conversations in the Oval Office.
I'll take that, I guess. Yesterday, I went to the floor with on a leadership hour, and we talked about budget with a couple of my colleagues, and I threw up the chart on mandatory spending and the squeeze that it's putting on the discretionary piece. And as an appropriator, I've got a first row seat to that, so I see the squeeze that's happening. And in the not too distant future, it's obvious to me that we're not going to have, unless we have massive tax increases, we're going to have absolutely just a very difficult time addressing even the basic functions of government, including turning the lights on in this Capitol. When I look at the net interest on the debt, and I know that it's north of $200 billion today, and that as you look at the 10-year window out to 2025, before my 2-year-old grandson turns 12, before my 8-year-old can vote, the net interest on the debt is projected to be, President's budget, $785 billion. That's a staggering number. I would argue that it's an unsustainable number, and that the markets will speak very loudly long before we ever get to $785 billion. So how serious are you about us looking at the mandatory side of spending, the 2/3 of spending that's on autopilot right now, that's getting worse by the day? How serious are you about addressing that, and why do we not see a better depiction of it in the President's budget?
Congressman, first of all, obviously nominal dollars tell one story, but if you look at it in the context of the size of the economy and what the world will look like 10 years from now, we're now in a $17 trillion GDP economy. It's projected to be 27. So it's going to be a much larger economy. So the number, while it's a large number, is not growing as a percentage of GDP anywhere near the rate that the nominal dollars are growing. I've thought for a long time that there needs to be a bit of a space in the political debate for the conversation on finishing the fiscal job to be done is required. We haven't seen that in the last few years. We have seen tremendous progress, though, in reducing the deficit. While I'm not happy about the discretionary cuts and would like to see some alternative budgetary measures to replace sequestration, there's no question that bringing the deficit from 10% to 3% of GDP is an enormous, enormous accomplishment. And I couldn't be sitting here with confidence telling you that at 10% of GDP, we were in a sustainable place. When we were looking at numbers, 9, 8, those were scary numbers. 3 is more of a normal number. I mean, it's roughly primary balance given the size of our debt service. The goal ought to be to kind of do the things we can do now to grow our economy, because a growing economy is the best way to solve the problem. And that's why we talk about things like infrastructure. I mean, we're short-selling infrastructure now, which is necessary both for short-term and long-term economic health, and at a time when I think there's a bipartisan view that we should be doing more on infrastructure. So I think that what we can do in the next year or two should be to do the things we can do together to grow the economy. I'm not sure that a debate, going back to the debate of 2011, 2012, would be the way to solve that problem right now. We've done an awful lot. Right now, doing the things that would grow the economy, I think, would really require our immediate attention.
Mr. Chairman, can I ask one more quick question?
Sure.
I know we're into someone else's time, Chaka's time, and I certainly, I don't want to wear out my welcome. Real quickly, a word about what you see in the near-term future on interest rates.
Well, I never predict interest rates beyond what are the assumptions in our budget. And obviously, our budget shows a gradual return to more normal interest rates. We don't predict a time. The Federal Reserve will make its decision on when it will move to change monetary policy. And then the markets will make their decision on what how they react in terms of longer-term rates. I think that in an economy that is growing, in an economy that is right now one of the healthiest in the world, it's a question of when, not if, interest rates start to go back up. The budget assumes interest rates that, if anything, are on the high end of what is likely to happen. So I think for budgetary purposes, we've been conservative and we've built in assumptions which, if I was giving my honest, best guess, are probably a little on the high side. But I think that's the right thing to do for budgeting, because I don't think we ought to be putting in numbers that understate the cost of debt service.
I thank the Secretary, and thank you for the additional time, Mr. Chairman. I yield back.
Mr. Secretary, I would suggest when you're asked what will happen to interest rates, you simply respond, they will go down, they will stay level, they will go up, but not necessarily in that order.
Thank you, Mr. Chairman. So the head of the International Monetary Fund this morning says America has the best economy of any of the economies in the world. In terms of our competitors, the Federal Reserve just a little while ago, the Beige Book says the economy is continuing to expand in almost every region and sector. We've had now 59 months of consecutive job growth. In the last 11 or 12 months, 200,000 plus jobs a month. So there's a lot to be thankful for in terms of the productivity of the American private sector. There are remaining challenges. I want to just raise an issue that's not about now, it's about the future. And it's about our competition. So I kind of sense that we're competing with billion-plus populated countries like China and India. We see the EU has organized itself in a grouping, and we're competitors and partners depending on the day of the week, but that America's position in the world is that we are the leader, but that lead is no longer absolute, it's relative, that there are people who are seeking to eat our lunch. I mean, they like to have what we have. They would love to have the strength of the American economy, and they're doing the things they need to do, whether it's educating their populace or so forth and so on. And their budgets are growing. Now, I'm interested, in NASCAR and these cars pulling to the pit. They got all these different things. We have something that in our pit, we don't have that our competitors have. They have consumption taxes. Got 148 countries in the world use a consumption tax. We don't. And, you know, much of the time when this is discussed, it's always about a VAT or something. I'm not, I assume we might even be innovative enough to have a consumption tax that wasn't a VAT, or maybe an American form of a consumption tax. But our economy is, in its majority, driven by consumption, except we are seeking revenues as a government from areas that are much smaller bases. So the first law of tax, you know, concepts and policy is you want the broadest base possible so you can have the lowest rate, so you can have less people trying to evade it. And I'm wondering, given all of your experience, and I think my colleague raised this point about your bio, and not in this particular moment, but do you see a point in America where in order to continue to lead the world, to have the finest military, to do all the things that we want to do as a country, which some people are starting to, I think, understand we can't do on the cheap. I mean, these things actually cost money, that the government may have to think anew about how we go about getting revenues. We're chasing revenues in some very narrow alleys when we have an economy that's based on consumption. We have our competitors using consumption taxes. We don't use one at all. Okay, so you know when Japan went through their thing, they could say, "Look, we're going to raise our national consumption tax, and we're going to move in a different direction." So I would love to hear your thoughts on this.
So let me start just with the broad view of the world that you describe. You know, I think that there's no question that our economy is being looked at globally as the leader of economic growth right now. There are other countries with emerging economies that are growing at a faster rate, but there are other mature, developed economies that are doing as well as we are. And I think that, if anything, the world is over-reliant on the United States right now, because you look at the numbers, we're not big enough to pull everyone along, even if we grew another half a point or a point more. We can't make up for a shortfall in growth in Europe. We can't make up for a shortfall in growth in Asia. So I think we have to want other countries to do well, for the global economy to do well. And that's what I say when I meet with the Chinese. We want your economy to do well. We want you to play fair. We don't want you to break the rules, but we want you to do well. It's good for you when we do well. It's good for us when you do well. I think they all, right now, after the financial crisis, we're at a moment in time where the world looked at the United States for a few years as being the cause of the financial problem. And now they look at the United States and they marvel at the resilience and ability of the U.S. economy to bounce back. And there's something about the American spirit, the kind of indomitable American will to pick yourself up and get going again, but also the flexibility of our system. You know, in a lot of countries, people won't pick up and move down the street to take a job. In the United States, if there's a new industry that emerges, people go to take the jobs. They want the work. I think the core of your question is a very important one. We need to have a revenue base that's sufficient to support having us be the leaders in the generations to come. That means we have to continue to have the best research and development. We need to continue to have the best educated workers. We need to continue to have the infrastructure that's needed for commerce in the future. And without an adequate revenue base, you can't support that. You know, we've put some ideas in our budget that are our thoughts as to how to expand the tax base in a way that gets at the question of how do you go after a bigger, not a smaller base. And you take one specific idea, stepped up basis that we put in, it's an attempt to get at taxing income that is never realized in a generation when it's earned. It goes tax-free from one generation to another because people don't need to take the gains in their lifetime. When you and I retire, I speak for myself, when I retire, I will need to draw down my retirement savings. They won't, they won't be something that just sits there to be passed on. And I'll pay taxes on them when I take down my IRAs and 401ks. We thought it was entirely fair to say income shouldn't be accumulated and never subject to the income tax. So that was an attempt to use our income tax-based system to broaden the base in a way that reflects principles of fairness, not saying we want to tax it more, but we want to tax it the way it would be taxed if you needed to use it in your lifetime. And there are always questions about shifting to a consumption-based or some different tax system. It's complicated, obviously. The challenge would be to design a system that would be progressive, and that's not straightforward in a consumption-based tax because people at lower income levels tend to consume a much higher percentage of their income than people at higher income levels. There have been a lot of it.
But you can, we don't have to joust about it today but you could exempt certain income categories or, I mean, there are ways to get at it. The real point is whether, given that we've used this income tax for over 100 years, and given that in every survey, the American public is convinced that it's unfair, right? Whether it is the revenue source that can carry the country for the next 100 years. If the only way someone can get elected president is to promise to cut taxes for everyone, at the same time that we are going to be competing with the Chinas and the Indias of the world to preserve our position in the world, these two things may not work together. That is that at some point we may actually have to spend more money and rather than having a debate about what we're cutting. And so I'm just wondering whether or not we have a tool that has some limits, and the most important one of which is the American public doesn't believe it's fair.
It is definitely something that we think about, and we always look at the academic work that's being done. I think to in a practical way shift from an income tax to a consumption tax is an enormously complicated undertaking. But I'd be happy to follow up with you on the conversation.
I would love to talk to you about it, and again, not for now, but for the future. I do think that some of the thinking about what directions the greatest country on earth might go so that we could have a reliable revenue source might be worth having some discussions about. Thank you, Mr. Chairman.
Thank you. And let me ask you one final question. You've been very generous with your time, but I want to ask you about the way, I guess, the IRS does these regulations, about two regulations. One was statutorily mandated. I mentioned in my opening statement about the ABLE Act, and the states are going to administer that, but the IRS has to write some rules, and it's supposed to be ready by July. And if you know a little bit about that bill, it's going to bring peace of mind to like millions of Americans that are facing these challenges of disabilities. So a lot of states are already moving ahead to begin to administer this kind of program. And I guess just from your perspective, is that something, the July deadline that's in the statute, will that be able to be met?
Mr. Chairman, we are working very hard on that rule and are trying very hard to meet the deadline. I'm hopeful we will, but I'm happy to follow up with you as we get closer to June to give you an update on where we are.
I appreciate that because, again, this is one of those pieces of legislation that's going to help millions of Americans. The other thing is a regulation that I don't really care when you finish, and that has to do with the 501c4s. And that was promulgated, had like 150,000 comments. It was pulled back, and as I understand it, the commissioner, there was some concern that it would be a kind of a wet blanket on the 2014 elections, and it wasn't re-promulgated. I guess it's being worked on, and I think the commissioner said that he doesn't want it to look like it'll impact even the 16 elections. So it sounds like that's not on the front burner anymore. You got a view on the timing of that? Again, I don't think that's statutorily mandated. It's something that you all want to write and promulgate and have comments, but it doesn't sound like it's going to happen anytime soon.
Well, Mr. Chairman, the proposed rule that was put out was meant to start a discussion. It started quite a firestorm of a discussion. And with the 150,000 comments all require attention. There's been a process by which work has been ongoing to understand and think through the issues. I can't give you a schedule, but I can tell you that there's going to be a very careful process as we go forward, and we are always attentive to comments on important matters.
Great. Well, thank you very much, and thank you for your time today. You've got a big job, tough job, and if we can work together, we'd like to do that. Again, thank you for being here today.
Thank you, Mr. Chairman.
Hearing is adjourned.